HTJ.tax, the international tax firm for 6, 7, and 8-figure investors and entrepreneurs who are living that international life. Are you ready?
Please address reporting of joint accounts and joint property where one spouse is U.S. and the other is non-U.S. I am American, but my partner is Austrian. We have joint accounts and are joint property owners. We both report and pay very high taxes in Austria, but I do not know how to go about reporting and deductions. Unfortunately, we can't give you a step-by-step as to how to report deductions. In terms of the foreign accounts now, depending on the thresholds, that's definitely reportable on your FinCEN 114 or the FBARs, right? So which we mentioned previously. That is very, very important because, of course, failure to report those accounts may be up to 50% of the value, the maximum value in those accounts. So that's really, really important, okay? Now, as to whether it's joint, and this is a question that I got as recently as yesterday, you still need to report the full value of the account, even though it's jointly held. You still need to report the full value of the account, unfortunately. Now, you would also be aware that in addition to the FinCEN 114, the FBAR, you also have the 8938 or the FATCA form. So that has a different threshold. It's a higher threshold, but it's similar. It reports similarly as the FBARs. And then people always ask, well, you know, that's really confusing. Why am I filling out the same stuff on the FBARs as well as on the FATCA form 8938? And here's the reason. So the FinCEN 114 doesn't actually go to the IRS. The IRS has responsibility for collecting it, but it actually goes to a department called FinCEN, or the Financial Crimes Enforcement Network. They both sit under Treasury. So within the Treasury Department, there are a number of units or divisions, the most popular of which is the IRS, but there's also FinCEN. So FinCEN receives the FBARs. If the IRS wants to see it, they need to request it from FinCEN. So that's why around 2010, 2011, when the Financial Accounts Tax Compliance, Foreign Accounts Tax Compliance Act, or FATCA, when that was passed, then they took the opportunity to introduce 8938 so that they get a copy of the foreign accounts as well. Now, there are some slight differences. If it is a bank account, a regular bank account, absolutely. It's going to be reported on both. But there are some things that are going to be reported on the FBARs that will not be reported on the 8938. So for example, again, as I mentioned, if you have signing authority over a corporate account, so you're not the UBO, you're not the ultimate beneficial owner, but you have control over it, so you can sign, even if it takes 2 signatures on a check or to initiate a transaction. The point is you can sign. That's going to be on the FBARs, but it won't be on the 8938. In addition to which, if you hold an asset in a structure, so for example, you have shares in foreign companies that's below the threshold for the 5471, or, you know, certain, for example, real estate. If you hold real estate in a structure, you may need to report that on the 8938 as well. So I just want you to be aware that you have 2 forms to consider, not just the FBARs. And if it is that it's jointly held, you still need to put the full amount on both. Now, as to the joint real estate, if it's held in a structure, as I mentioned, then yes, it's on the 8938. But if it's just an investment property, then and it's being rented out, it's Airbnb, whatever it is, and there's a yield, there's rental income that comes from it, or maybe you guys sold it, and so there are capital gains, then only your share, so let's assume it's 50-50, then only that 50% share will reflect on your returns, not the entire amount. So hope that helps. As to your taxes paid in Austria on the, let's assume it's an investment property, then of course that's going to be deductible. So, you know, it depends on the nature of the taxes. It may be on the Schedule E itself, or it will be on a Form 1116, depending on what it is. But definitely you're going to be deductible and you're not going to be taxed twice. That's an important thing to take away, that double taxation only occurs if your tax team, under two situations, maybe the tax teams aren't coordinating with each other and they're not speaking to each other, then things might get double taxed. Or there are very few transactions that may be double taxed at the federal level, but it's more likely to happen at the state level. If it is that you still have residency, you still are tax resident in a given state, and that state is going to tax your worldwide income, that state may not recognize foreign tax credits. So for example, taxes paid in Austria. So then in those situations, yes, you may be double taxed. But again, once you've done proper planning, you should be able to legally avoid any double taxation issues. Sorry, not Form 1114, 1116 is the one with foreign tax credits. Foreign tax credits, 1116.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.